what should investors be doing? Let's ask Anurag Singh that. Anurag, hi, good morning. Great to have you on the show. Anurag, seems like West Asia is pretty much still on the boil, but here's hoping that we don't see those extreme escalated $110 per barrel kind of levels on crude at least. Having said that, Anurag, do you sense that investors really need to hedge against this oil price volatility?
Aisha, morning to you and the viewers as well. Well, any good negotiation, you have to put a posturing that you are serious about the war. And this also looks like a posturing by Trump that the discussions are going nowhere and will start the blockade. Interesting point is he's not starting the blockade today. He's given it a timeline, right? That I'll start it at 4 p.m., tomorrow, something like that, which tells us that there is a room for maneuvering and conversations and negotiations. So I think you are right. I don't think we'll see $110 price again, at least in the short term. But at the same time, I think things are not going that great on the negotiation end as well. Partly because we don't know who's in charge in Iran, and there is a domestic posturing there as well. Secondly, you have a regime which is kind of not answerable to almost anyone, right? So, they have it easy. It's not a level playing field, and looks like US is getting uneasy in terms of what is the way out there. So I won't be. Had you asked me last week, I was more confident that the worst is behind us. Today, I won't rule out that there would not be any B-2 bomber attack on Pickaxe Mountain or some surprise attack by US. I'm sure of one thing, though, that US will not lose soldiers in the war. That's the mandate that Trump doesn't have. But outside of that, we should account for some risk, although nothing to be alarmist. I think it's okay.
But as an investor, what should the right approach be? History tells us that the markets don't react to the same event twice in the same manner. Could it be different this time?
Yeah. No, it should not be. I think market will not react the way they did in April and March, April, May. So I think that period is behind. I think one of the other good part is, good or bad, but Trump, the midterm elections are due in November. So Trump would not like to do anything which would unsettle, the inflation cart here in US. So that works a little bit in the favor of, the whole situation where US would like to just muddle along, do the tap dance and just kind of buy time. Pretty much that's what Iran is doing too, right? Buying time. One thing is also sure that the more Iran tries to delay this, more alternatives the world is finding around it, right? There are already conversations around pipelines on the other side of, Dubai or something through Syria and all that. So one thing is sure that maybe a year from now, the leverage of Iran will be much, much lower. But we'll have to just stay put till that time. So investors, I think, you got to stay put. If you survive the last 3 months, I think then the next 3 months are not going to be that bad. Look at S&P, 24% earnings estimate for this year growth on the last year base. So, what could go wrong?
Anurag, earnings is something which everyone is tracking for India as well. You spoke about the 24% growth in S&P earnings for FY27, but that's something which is not there in India. So where is the money going to come from for India?
Well, the world is playing momentum. Everybody is playing momentum. India is also playing momentum, right? So momentum out here is with all these Samsungs and SanDisk and all the memory players. SK Hynix got listed at 1 trillion in US. Looks like pretty much that's the peak that would define the peak, but we'll find out. But I think India is playing momentum as well. I can't imagine. And by the way, I gave a IT call on IT about like 3 months back, sometime in April, last conversation. Looks like we've kind of formed a bottom there, and looks like we've also formed a bottom in US for software companies. But outside of that, I'm surprised how cheap the large cap banks have become. Yet nobody is willing to buy it, and everybody is pumping money into mid and small caps, the other 400 within the Nifty 500. So, I get surprised by it, but not so much because Indian market continues to be driven by liquidity flows. Wherever the liquidity flows, which is broadly the 32,000 SIP flows every month, regardless of valuation, things would keep going up until people realize there's no floor to this valuation. So that's a bit of a worry. It's going to happen someday, but let's not cry foul. The fun continues for now, right? So, well, earnings revision doesn't matter. The flows matter for India. As long as investors have faith and they keep pumping money to big and small, I think the party will continue. And there's no foreign investors to spoil the party there as well, right?
Anurag, I just want to quickly extend that conversation on IT. Would you say that the easy gains on IT are behind us, or do you still believe that there is decent value, another 5-10% unwind could very easily happen?
Well, I don't know whether we've had any gains at all, right? When I was talking of IT, I mean, I already said that it can still drop maybe 10% from there. I think TCS was something like 2,400. It went down to 2,000 and then came back up, right? So pretty much here is the call. If you are invested in India, your 10% should also be in a value play which looks very cheap and is a long-term good bet with good 4 to 5% dividend yield. That's the call here. The call is not that it'll go 50% up in 6 months to 1 year. That's not the call I'm trying to make here. I'm saying it's very steady, very great value, and it ties into the India story, right? If IT doesn't do well, then where is the employment? Where is the other the whole employment boom in India and all the luxury sectors that get benefited from it? Where will that go? And the other is things were getting a little too pessimistic. So I think it's a value play. It's a play that will give you 10-12% solid for next 3 years, 4 years, perhaps more. And you can't go. Think companies are not going to get decimated from here, right? They'll survive and they'll beat this, and they might work with lesser workforce, but they will keep their margins and they'll keep their profitability, right? And that's what we hear. So yeah, the gains have to be made. I mean, but you know that I don't give calls of 2-3 weeks or a month or so. I give medium to long term calls, and only two sectors, private banks and IT, look at a reasonable valuation in India currently. And of course, I mean, never mind, nobody wants to invest there. So that makes it even more attractive for a value investor like me.
Right. Okay. Great having you today on the show, Anurag. Always good speaking with you.
Thank you. Pleasure.